जमाने के नए हैं रास्ते, लाए हैं कुछ हम सबके वास्ते, सुनेंगे सबके दिल की बात, रहेंगे साथ दिन हो या रात। हम सबके साथ हैं, हम हैं हम सबके साथ हैं। व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना। लिया हमने अब दिल में ठान, करेंगे पूरे सबके अरमान, नई जिंदगी की है आस, आसमां भी तो है अपने पास, बनाएंगे अब सबको सबल, सुनहरा होगा सबका कल, बुलंद सबके जज्बात है, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं, हम हैं सबके, हम सबके साथ हैं।
Good morning and good evening, everyone. It's from various parts of the world, the people joining here. Really thank you for making time for this event. And, we hope everyone is staying safe and keeping healthy. It's indeed an honor to have a distinguished guest with us today as a part of our SAMVAD series. This is a part of Amit Mehta Tech Talk in memory of one of our founders in Basics Group. Thank you, Naveen, for accepting the invitation and being a guest. For the benefit of everyone, let me venture to introduce Naveen Surya, who is our guest today. I know it's difficult to cover all the accomplishments that he's been able to achieve in a short introduction, but let me try. Naveen is a law graduate. He's a company secretary and a management graduate. He started his career, interestingly, in cement industry, and I think very quickly realized that the future is in technology, and made a switch to TCS. So he had a short stint in TCS before he got into his entrepreneurial journey with SL Group, where he was instrumental in setting up various group companies. The most, I think, talked about one was It's Cash Card. He spent a long stint there, and I think he spearheaded over a very successful exit for the company in 2017. Most of us may remember the It's Cash sale that has happened a couple of years back. So Naveen was the managing director of It's Cash at that time. And then he chose to play a role as a more like an advisor, ecosystem facilitator, I would say. So currently Naveen is the chair of Fintech Convergence Council. And he also chaired Payment Council of India. Today, he is the chairman emeritus for Payment Council of India. He also serves as director and advisor for various national and international corporations. and he has been also an angel investor in many startups, also in the fintech space. Naveen also contributed to public policy space as a member of various committees, more notably RBI Gyro Committee, and he was a member of Dr. Vatal Committee on the framework for financial digital payments of Niti Aayog. He speaks very regularly. Many of us must have heard him speaking on various forums. He's been interviewed by many national and international platforms, especially on the area of digital payments, fintech, and broadly macroeconomy. So welcome, Naveen, again. Thank you for being here. Um, so Naveen, I think the topic that we chose today is very apt for the day. We wanted to explore, how the innovations in financial technologies is disrupting the field of financial inclusion. So a lot of our audience come from that background and would be delighted to learn how the developments can enable the agenda that most of us are trying to achieve. So to begin with, Naveen, I think it will be very apt to try and learn your entrepreneurial journey. And I think that's pretty pertinent for the day, because most of the things that we are not able to see, what's going to happen tomorrow, apparently you seem to have seen a lot of fintech wave coming in your its cash days. So it'd be interesting for our audience to learn how did you have gone about building the company at the time when I think fintech was not really so much of a buzzword. So over to you, Naveen.
So first of all, Sasi, thank you very much for inviting me, and amazing to see such a great audience in numbers, and that too on the topic which is very close to my heart. Like you rightly said, that this was exactly what we were doing in my previous organization, ITSCAS, for almost close to 12, 13 years, and of course a longer 17 years in some other businesses there. So really, thank you to give me this opportunity. Well, my journey. So maybe I was a born entrepreneur. I actually was born in a Marwadi business family, running a business already. So I don't remember when I started walking towards my own business. It happens naturally. I'm sure those who come from a family business background know it. It's only at a certain age when I was kind of done with my graduation, I realized that a lot of those businesses were not scalable, and I needed to learn new tools, new methods, new ideas, and that's where I kind of pursued my post graduation. I kind of worked with certain organization, but having done all of that, I realized that an entrepreneur always remain entrepreneur. There was always this hunger that your 20 ideas as a consultant. So in TCS I was, while exposed to technology, but my stream of work was mostly consulting. So we were placed in any of those top 500 companies, Fortune 500 companies. Our job was to advise them on some business transformation areas or technology transformation areas. So while doing it, what we realized, there was this hunger that you talk about so many ideas, but you never get to see what has happened to them. Did really what you really thought that would be the outcome happen, not happen? Or if it didn't happen, why it didn't happen? There was no learning after that. So there was always this thought that how do you really go back and dirty your hands like you've done for your business, your own businesses, and see it to a complete fruition. That's how the entrepreneurial journey started. It's somewhere in 2000. Very few people know that at that time I had actually option of 3 business plan that I prepared. I'm talking year 2000 again. So a lot of things were not there. Mobile phones had just introduced. A lot of things were already happening. I'd also come with a lot of international stint on learn a lot of new models. For an example, credit bureaus were not existing in India. The only market that was the stock market in the India. So many things, many models were not at all there in the country. So you could see so many things to be done in a kind of short span of time. Things are changing rapidly. So with that, there were 3 business models we had option. One was on a exchange where you could bring businesses together and help them guarantee the payment and delivery both on a corporate deals. That was the first model. Second was what you know today as Aadhaar. Actually, way back we thought, can we digitize the census data? And that was a time when Census Board had just released the RFP to digitize their data. So we were exploring, can we digitize if they allow us to use it selectively for private use? And then we called it Public Information Bureau. And I don't think the government is still giving that title, but their idea is eventually the same, where let's say that, so from birth to death, you have all kind of data points on an individual and you could use it in a right way for the right things. So that was the model. The third one was the organized retail, that what we looked at. But very soon we realized in all that model that you could pursue those businesses, especially the retail side, if you're in a real estate. because majority of our cost actually is the real estate cost, warehouses to kind of stores. And we realize that's not the core strength with the kind of group that we're going in, and that won't be a feasible. And to some extent, happy to see that some of those have played out. It's not been very easy for those who entered without that extra muscle of real estate, or let's say that extra capital to survive in that business. So finally, we ended up getting into a business like a exchange where we had of, you could say that it was the same time when Alibaba was getting built in China. And our model was actually to some extent like Alibaba. That time I didn't know about Alibaba, that you were trying to build a marketplace, a wholesale marketplace, trying to digitize it. Unfortunately, that was the first time we encountered issues around payments. And that's where we realized that even a account to account payment for businesses is not possible. The only tool available was the credit card. So there was a lot of learning, and then eventually we started the journey from there. And one thing that stuck to me, that in those business models when we planned, there was a thought behind all of that. There was a thesis that I still continue to pursue, and we keep evolving that model better. It was a model which I personally, along with the elite team that worked with very closely with me, we formed called Converging Economy. And actually, in many forums, I've told that probably I'm a product of Converging or a Convergence, or you could say we are part of the Convergence era. Whatever we have seen, things are integrating. And the first one that had not happened, but I had personal conviction, was the digital convergence. I don't need to explain it. Everyone knows it. But again, just go back year 2000, you had no clue it will happen. What you see today, that's the actual digital convergence in play. But the businesses that we built was actually thinking that if this plays out, what would it lead to? What opportunities would it create? So there were 3 or 4 blocks we had identified. The immediate next one was a channel convergence. It was working in 2 ways, that if you're a large corporate, today you sell through a certain kind of a channel, which is a physical or let's say distribution based or whatever. But eventually your digital channel will be equally important. And eventually you will be an omni-channel company. And if you're a retailer, which actually all of you would connect to, you would not just sell physical goods, but every goods and services that could be delivered digitally. And again, the only credit I could take is that we could think through it in year 2000. Probably eventually all of us have realized we are trying to do it. We continue to do it. It remains a very big opportunity. So we called it a channel convergence. We also call it today omni-channel strategy, but that is what we thought, that will create some opportunities, and that is what will happen. Along the side, because we faced a lot of issues around payments. And as I said, the only digital payment in a true sense that time was a credit card, which was with less than 1.5% population. We realized that if internet is going to be the economy, whether you're a business or a consumer, if you don't have a way to pay digitally, whether for business transactions or consumer transaction, you're going to have a problem. So that's where we coined a word that you would need a payment convergence tool, which means you need to have a single account where your money can be digitized and can be used, whether on a physical channel or a digital channel. Now, whether you're a business or a consumer, you could have different instruments, you could name it differently, you could regulate them differently, but eventually you need a way of holding money which can be used in both physical and digital domain. So we called it kind of a payment convergence. At that time, we said that probably when all these things come in a play, it would eventually lead to converging economy. However, a decade back, we added one more kind of a addition to it, which actually became increasingly clear as we were rolling out the ITSCAS model and some of the other businesses that we were working with, was a financial services convergence model. And it's connecting to the theme of the today's discussion, which is financial fintech for inclusion, right? So what we said is that if you really have to do inclusion, I mean, I would rather like to title it that fintech impact, because we're talking more impact market, and probably we'll cover that in a later question. But fundamentally, if you have to deal with the impact, you're dealing with the massive size of a customer whose income is $200 a month. And in that $200, the financial services part is a very small fraction. If you have to deal with that, and if you're actually just delivering a 1 or 2 services, and knowing that the BFSI industry today, other than banking and payments, a little bit, everything else is like a mile wide and inch deep. Unless you're able to deliver multiple services through the same channel to the same customer, there's no viability, there's no sustainability. And if that is not there, then you can't overcome or achieve the objectives that you're saying. So we also said, increasingly for our country and for all of us to be successful, we need an integrated converged financial services model. And then eventually it will lead to all the final converging economy. So that has been the vision, that has been the motivation that led to Intrex India, which was the first exchange in the country. that led to a couple of other businesses, and then eventually it gets on a consumer side of a payment convergence that you saw.
Great, incredible. So, in this conversations, we basically bring together innovators, integrators, and influencers. That's what we call. And you kind of cover all three titles, if I would, say. So you've been an innovator. Sort of playing an integrator role today through this Convergence Council, and you literally named it the way you were talking about it. And of course, you influence a lot of us and a lot of the industry players. So let's come to the impact side of what you mentioned, or inclusion broadly. So there's so much happening. Today, the fintech world is, everybody heard the word, and there's so much action out there. Maybe we could say that this whole jam trinity could be the watershed moment to some extent, more from an inclusion perspective. The whole Jan Dhan account, the Aadhaar and mobile phone, I think, have changed the whole way that we have seen banking. And on the top of it, all these innovations that we hear, AEPS, whether it is IMPS, UPI, account aggregator, NPR, OCAN, WhatsApp. I don't know. There's so much maybe in the pipeline happening. What do we as inclusion practitioners, need to draw from this? How is it going to really, you think, all these railroads that we have laid is going to help in inclusion? You talked about integrating services, so I think that railroad is being laid now. Can you talk a bit more to that?
Sure. So I think I actually pointed out to a word called fintech for inclusion, right? And I said that probably it should be fintech for impact. Why did I say so? So first, I want to clarify that this whole word inclusion came in about a couple of decades back, mostly led by the government, and then eventually RBI. Then bank became the real horse, that you need to somehow get everybody a bank account in their hand. And probably there was a time when you had probably India just divided into two sides. You had top 5%, which had everything, all the means, all options in their hand, and then rest of us, who probably hardly had anything, and then most of us had nothing in terms of to be able to even afford a financial services. So that time it was like a social drive. It was always seen as a social responsibility to do it. Now, at the same time, just before that, there was also a thought which still persists in a lot of people's mind when they do policy or when they talk, even journalists talk about it, that there is a rural and urban divide. To be honest, in my thought today, and it's for last 2 decades, I've been saying that both in today's context are increasingly getting challenged. First, the demography that you saw as a pyramid, and as while we say that it's a bottom-up pyramid, etc., that's no longer going to be true in very soon, and it's actually already changing. That pyramid is changing to be a diamond shape. What does it mean? It means your bottom is actually getting narrowed down, and it's a middle which is bulging out. So you suddenly have a top which will remain narrower. I won't say that it will not remain narrower. It will grow slightly, probably from a 5% today. You could talk that 20, and eventually it will be 30%. But you're still going to have a large number of people bulging out, large 50%, which is what I call as an impact economy, which is what the real middle class, these are the people who actually have money, they earn, they can spend. They may not have adequate saving to do some of the things that only top 20, 30% can do. So most of these people earn and probably spend. Their savings are less, but they consume and they spend. And they are the guys who are growing rapidly. Then you have a bottom which is shrinking. And probably the inclusion today from a socialistic perspective or a government intervention perspective is actually that 20%, and that's gradually narrowing as our poverty lines are changing, as the below poverty line people going below, numbers shrinking. So that is where probably still the focus. And I think the policy differentiation between these two segments is still not there. Even the approach of businesses is still not there. I mean, most of the product either you're doing at the top or bottom, and you're forgetting the middle completely. So the middle of the pyramid, which is the real bulging out segment very soon, there's not appropriate offering. There's not appropriate products. And that's why you still see exclusion there. And what, as we were talking just before the session, what you call is an underserved market. They may have some facility, they may have access, but it's of not relevance. It's not properly served. They're not comfortable the way they're getting served there, or probably is not meeting their expectation. So that's the opportunity that we need to look at it. On the urban-rural divide, why I brought that point, I would always say that there was a time to look at that you need penetration in a rural and urban, and then the rural issues were different. They still are to some extent, which all of you work very closely in those areas. So, so I'm not saying they are going away, but assuming that all people living in rural are poor and all people living in urban is rich, because most of the policies start from there, that's completely wrong. You could, in a village of, let's say, probably 100 family, you would still have 10 families which could afford everything. They may have or not have access, which could be due to infrastructure challenges, which could be due to connectivity. But those issues are getting resolved faster. And as they get, probably they don't need that support. All they need is just that connectivity, and you suddenly see some of those geographies booming very quickly because they have the money. The issue is not of money. So on the other hand, if you see even city like Mumbai, there are pockets which probably the population will be equal to 10 or 20 villages who probably are completely underserved. And most of these migrant workers whom we probably all serve are probably in that bracket. They earn probably between 10,000 to even 100,000 a month. And probably they spend a lot, they send money, a lot of money back home because of their responsibilities, but they all fit in there, they're underserved. So if you look at this context and then say, okay, now we need fintech and how it can help with all the innovation and rails being laid, how could we kind of target the customers better? I would say to some extent rails were there. It's not that the rails were not there. The access and the technology issues had some problems, which is getting resolved faster. The challenge over has been that I think today we talk a lot about fintech, but we forget that there has been a generation of non-bank financial services entities who have created probably a lot more unicorns already, which we don't like to talk about. And they were equally good innovator. Probably what they lack is a digitization or a digital advancement, which is changing rapidly. There are already 4 or 5 examples. Look at good old SDFC Limited. What would you call them? I mean, why wouldn't you call them a fintech as they're adopting a technology? What would you call a loan, a gold loan company like a Muthoot? Right? That's very large industry. If you look at some of their market cap, some of these companies, what would you call a Bajaj Finserv kind of a company? So there are companies, right? There are companies like yourself who are doing again, and there are very large microfinance companies again listed. So one, we should not forget that fintech led companies are not only the I would say the technology companies or pure play technology companies. If you add a fintech impact companies, they are the companies who are able to penetrate to that buzzed up middle of the pyramid market, because that's the one which is really required to be served. That's not social responsibility. That's a real business opportunity. Has to be looked at that way. And by the way, I think we could support the bottom of the pyramid initiatives, but we can't do anything about it because we can't dole out free monies. It's a government who can do it, not us. So somewhere we need to look at this holistic view and say that, hey, while a technology can help you solve the problem, but let's not forget that the real needs are required when you're talking about an impact fintech. You need to solve them, and probably you could be as good if you're solving a problem and then doing it in a digital way. And don't forget, you will still need in this kind of a segment, omni-channel strategy, or what we used to call technology with human touch, something of that sort.
Great. So that's where I'm trying to sort of get you also, is that, while we talk fintech and there is a lot of talk about doing everything digital, the customer journeys being 100% digital. I mean, I'm yet to get a 100% digital loan or digital journey with a bank without having visiting a branch, but I think that's getting less and less. I don't visit bank as much as we used to, not even ATMs as much these days. But coming to the segment that we're talking about, you did talk about the middle bulge segment or missing middle, or we can call it underserved. This segment is served mostly by the last mile network, either it is a BC network or it's microfinance institutions or the likes. Right? There is a very core element to this whole business model is the touch, the human element of it. But then there is also this notion that creates a lot of redundancy, inefficiency. The speed gets affected, and how do we see this? This is sort of a as of course our rural and our underserved customers are also getting digitized. They're all owning phones, most of them, and not as many smartphones, but that also will happen. So in this journey of customer becoming more and more digital, are we going to see that fintechs the pure play fintechs are going to take over that market space, leaving MFIs behind? Um, how is that evolution you think is going to happen in that market?
So two, three things. One, I mean, even in your previous questions, you said that probably generally it's seen that the railroads are now laid out and now you could do a lot more digital. I would say that, let's say to some extent, the technology was the issue, but it was more about the telecom and internet access, not about the product being digitized, not about journeys being digitized. That was always being done. Yeah, there were some challenges around regulation, which are now rapidly changing as the access is growing, like a video KYC, for an example. So yeah, those were the problems and they get solved parallelly. But the fundamental issue always has been the product fitment with that bulk segment. And you said that, will the future journey for these customers be entirely digital? Will it be entirely physical, or will it be a hybrid? I have a reason to believe that at least for a decade, it will have to be a hybrid and an omni-channel strategy. Even in early days in our organization, we learned very clearly that when you're dealing with the mass middle class, you're not dealing with a homogeneous segment of a customer versus top 10, 20%. There you're talking about a common set of habits, behavior, access, understanding. You're talking about a literate person, you're talking about a rich person, you're talking about a well-connected person, well, let's say, plus the income levels. And they all speak English, they all are internet enabled, they're super users of internet. So they understand a lot of things you could very easily service. And whether or not we like it, most of the new fintech that you're talking about, whatever they say, they end up majority serving that segment. That's why if you see the journey of the digital customers, which has been probably earlier around 50 million, has reached probably in a couple of decades to 150 million. So we're still stuck at that 150 million with so much of effort, money put in. They've still not gone to the next 500 million. Why? Because the moment you go to the next 500 million, you're talking completely diverse set of customers. You're talking from a young student who may have profile-wise very similar to a top segment, but his income levels are probably only pocket money. What could you really do with him? Even if you acquire him, probably at best you could do 500 rupee worth of transaction with him. Maybe if you get lucky, $1,000. That's not good enough for you to build a business case or let's say large business just on that one segment. You can talk another segment which could be SME. Now these are the people who are somewhere in between, understand some technology, a lot of business, have money, but they need a lot of trust, because in business, for everything in India still is built on trust, and the trust gets built in their mindset only with the some sort of a physical relationship. They have not yet learned to build trust with just the pure virtual, pure digital. Of course, it's changing over a period of time, but their first truth has to be physical. In the first instance of meeting, if you try and do a Zoom meeting with them and say, hey, will they trust you? It's unlikely, especially if they are new. But if you've done it, next time you request them, and if they understand a bit, they will be open to do that with you. So that kind of so the moment you talk about a diverse segment, the moment you talk about diverse habits and the diverse income level and habits and behaviors and technology literacy or technology adaptability, you have to have a strategy to meet with the omni-channel strategy, which means your products should have capability, your organization should have capability to deliver digital or physical. Fortunately, unfortunately, we have not seen entities who have done this part well. Now, we've seen entities who are very good either in this kind of a hybrid model where they have technology behind, like most of the entities in BC side or a PPI side, especially remittance side. So they can do that. They could use technologies as a backend well, but front end is some warm body. Or you have companies who have complete digital, where entire journey is digital, but then they are still limited to that 100 million, 50 million, 20 million. Some very few companies have been able to reach to 150 million. So I believe for a decade, I think till there is a 1 or 2 generation change, the complete pure play digital journey in a mass middle class, at least that much of time is there, and one will have to be prepared and figure out that how can you be best in both.
Yeah, that's a very practical view, I believe.
Let me just try and switch on the light. I guess it's dark. Go ahead. You can ask the question.
So yeah, fair enough. And we need to see a larger market that is still, learning this whole digital, and trust is a very, very important factor. Let me very quickly switch to the pricing side of the game, right? So there is this whole notion that digital is efficient. So you have, a traditional bank or an MFI takes a lot of time and effort to reach that customer, and today One can say that, there's a lot of alternate data. We can actually reach them much more. Large scale customer base can be built. Risk can be better assessed, apparently, using data models. So if the cost and risk both can be managed, then you would have solved to a large extent the credit gap in the middle. But I don't see the pricing that way is any different. Even if it is a proper fintech that is lending into the space, they are lending at the same cost, as a traditional lender, a proper NBFC or an MFI. So what is the differentiation? Is it just the quickness or convenience, or is it an advantage that a customer is eventually going to get in terms of the better price and better treatment? If it's just about time and convenience, then maybe not a lot of customers are hurrying for a 1 hour loan or a 2 hour loan. They are also looking for better treatment, a better journey, primarily price. So why are fintechs not able to charge less compared to others?
So it's a very, very good question. And I think a lot of people don't understand that in fintech, there are three cost bucket broadly. I mean, whether you're impact fintech or you're regular fintech, one is the customer acquiring cost, right? Second is your delivery of the product or services cost. And third is a compliance. And compliance is actually intricately linked in both, because first two activities are very closely linked to all the compliances related to KYC and when you deliver what all you have to do, being insurance or credit. So there are a lot of conditions, or a microfinance. If you look at fintech models today, which are pure play fintech, which have just created a complete new business, they're not riding off existing set of customers. For them to acquire a customer, and especially because the full digital customer today has a lot more option, it's equally expensive, like a physical cost. So most of the time, while they can reach the larger number of customer quickly, if their product offering is good, they can create scale within that segment who are fully digitized. But because you're competing, because in that segment, I mean, we used to have this classic example when we used to do the train ticket booking. The segment like ours would never even pay $10. Versus you go to the mass bulk guys, even if they go to an outlet where it's supposed to be more expensive, they wouldn't mind paying $20 and still being happier, because the need and a demand is very different. So today, because your pure play fintech digital companies are able to reach only a segment of customers where the supply is more and demand is less, or let's say limited demand is fixed. And so your cost of customer acquisition is high. The challenge is that the real bigger market, mass market, is still not reached in a way where you can digitally acquire them. However, the advantage of digital is when those guys get ready, and as the cost drops, then you start seeing that benefit. But because in today's context, that's not yet played out as well. I mean, you compare, the second problem is that our cost of customer acquiring in India are easily comparable to a developed world where that market is very big. While your ticket sizes, while your revenues are way lower. Look at all our financial services. Other than the credit side, everywhere else, your costs are very high. So, if the ticket side is low, then your ROI actually goes for a toss. Your recovery of the cost it's become a very long gestation. So because of that, today, while it is an advantage, and I'm not saying we shouldn't adapt to technology, we have to, because as you adapt, that's why I said it's a transition. You have to bring them on through probably that human touch, which means it's a cost. But again, wherever you could reduce, and over a period of time, what happens is while you acquired a customer through some extra cost, which is actually more or less same to a digital channel, to the kind of customer who's acquiring. But the rest of the services after that, as you acquired, gradually you can transition to them actually on a technology. Right? For an example, if you acquire a remittance customer, you will have to initially physically enroll him. He can do a transaction through that BC channel, through that PPI agent channel. But can you cross-sell him other services in a simpler way over a period of time, especially the, let's say, customer who is in age bracket of 20 to 30s? Probably there is a chance that they might do it, and they might do some 10 other services digitally over a period of time. So then your cost on those services goes down. But it's a time. I mean, you can't predict that, but that's how it is. But if you're going to be pure play digital, then you really have to wait and see that, is there a service which will only be completely digital and customer will have no choice and come? Either happens in a COVID kind of a situation or happens in a demand type of a situation. Unfortunately, they are not long-term sustainable. The moment condition become normal, you retain some segment of a customer, but usually not enough number to really give you that extra push. So those remains as a challenge, at least in this transitionary period. Probably this will change in a half to a full decade. At that stage, probably full digital stack companies will have an advantage. Especially if you are in an impact, you would have to run with a hybrid model try and digitize back-end services as much. But let's not forget, wherever we've scaled, for an example, look at the remittance model, which keeps coming to me in my mind again and again. I mean, who can deliver in a sub 1% that 3,000 bucks remittances, which for so many years, even a larger institution were charging 2 and a 5%. We've already in a 3 to 4 years time from the time it started on IMPS. And sometimes I always say that's a bigger inclusion model. That's a bigger rail. Because of that, UPI was possible and other was possible. But the real impact and expansion of market has happened because of IMPS.
Yeah, fair enough. I think we're in a transition phase, and some of these costs may be, written off over a period of time, and the benefit may pass on to the customer as they become more and more digital. Let me direct to one of the audience questions. Anand Bajaj from Pay Nearby has a question here. I think we were discussing about this in our back room about one BC, one bank issue. So Anand, I'm going to unmute you. If you want to, why don't you ask this yourself to be better if you can do that. Let me try and unmute you.
Hi, Anand.
Anand,
Hey,
go ahead.
thanks, Naveen. Glad to hear you once again, and such wonderful thoughts, the bulging middle. And while you touch the sensitive point of the viability and the price, while we endeavor to, as an industry, reduce the cost as much as possible, how does the policy alignment happen with the intent of inclusion? When will the advocacy need to be stopped and policy needs to be grounded and implementable? And more so to the point where we are saying the in the era where physical was the way and interoperability was not possible, how does one same agent gets to serve a remittance of a bank, Aadhaar withdrawal of another, lending with third bank? Because not every bank has same appetite to go and do the lending in the areas where possibly remittance is happening. And there are wonderful data models that terabytes of data we are sitting on, and customer wants services, but the partner banks may not be willing to. So while Nandan Nilekani report allows, it says, recommends actually that the interoperability should be allowed. Now, what does it take to really go there, Naveen? Sashi, you can add as well, please.
Great. No, I think the question is very fair, and I think we've been talking.
Interestingly, we have been talking in the back room about exactly same point. So Anand, you and I mean, we keep discussing. These are some core issues, right? There are industry evolution that happens where an incumbent, if you look at the telecom, the phone wasn't an interoperable one. Initially, it was you could only call Vodafone to Vodafone, but it changed very quickly. And every change on interoperability happened. The scale really kind of became big, and it really kind of accelerated. The unfortunate part is that kind of a realization in our BFSI segment is not happening. And because of that, or because of that mindset that we have as of an incumbent, and even policymakers have been told that this is too risky, how to handle it, they're not able to, let's say, open it up. But this is a one issue which has been close to my heart. We've been multiple times trying to point out to RBI that the last mile BC agent has to be agnostic. If you're adopting a model which is like a Kirana Wala, look at a simple model of a demand and supply. A Kirana Wala today, when a customer walks in, doesn't give him just a, let's say, a brand A soap or a brand B soap or a brand A toothpaste and brand B toothpaste. They allow the customer to say that, what do I want? And they make sure that that's available. So if the role of a business correspondent whole model is to create that supply channel to the customer, you should be able to actually deliver all the products, and then the brands compete on the quality, on the service, on making it better for the customer, as long as the channel which is distributing it makes sure that there is an availability of seamless all product. There may be scenario when you're working with one company, they may not have 10 other products which the same customer wants. So you're actually blocking off, and actually that is the biggest issue in this model, which is actually impacting the viability. Because then the same outlet, I mean, we were also talking about the financial convergence model. That model was exactly that if you want a viability in India, whether for a fintech or for a model like impact model like these, you need to have ability to sell multiple financial services product to the same customer. You will have $20 to $40 ticket size with one customer. If you can't deal with that, you can't create scale. If you can't create a scale, you will not be sustainable, and there will be malpractices. So it's an endless vicious chain. If you have to break it, we have to actually holistically rethink and say, hey, corporate BCs should work with multiple banks, with multiple partners. They should take all the responsibilities in a governance. And I heard you and Sasi working very closely to create the whole SRO framework for BCs, which is required, so that they take accountability, responsibility, work with their principals to get that confidence, and make sure at the end point, the policy support to deliver as many products from as many players without really linking them to a one particular brand. That is the only way to create a viable, vibrant, and a faster impact model. I'm avoiding word inclusion because I still believe that's a passe now. That's relevant to a lot lesser people. I think we need to create impact.
Yeah, fair enough. I think we have some work to do on the policy side, either it is FinTech Convergence Council or BCFI, PCI. I think we can come together and make some recommendations. Thanks, Anand, for that question. Let me also invite one more participant, Sudhir. He has a moment of truth questions. So, Sudhir, I'm going to unmute you if you want to ask a question yourself. Are you there? Could you unmute you? Unmute yourself. I'm trying to give you some access here. Sudhir, are you there? Okay. Otherwise, let me invite Rahul Mehta. Rahul is an entrepreneur trying to build. He's actually successfully built one e-commerce, for rural, and now he's building another one. Rahul, a very interesting question on how to leverage the network for not just finance, but how about fintech being useful for other things. So Rahul, you want to go ahead? Yeah.
Yeah. Hi. Hi, Shashi. Hi, Naveen. Thanks. Some amazing insights from Naveen, and in fact, very useful for what we are planning on doing and we are working on doing. So I just had, of course, this is not about pure play fintech. It's more about how fintech and the digital strategy that you're talking about for impact or for the underserved can be, any thoughts on how that can really the physical commerce can leverage that infrastructure or those strategies and take physical products to customers. When I say physical products, the likes of what the kiranas sell, because our business is all about creating a channel to take those products to the underserved. So if you can just share some thoughts on that.
So, hey, Rahul, very interesting question. Not that I have a ready answer for it, but I'm pretty sure that most of the players here, including Anand, Sasi himself, have tried and worked and still working probably with large e-commerce companies. And we have seen, probably, at least my experience is that we've seen mixed successes and probably still needs to evolve a bit more. So it looks very attractive. And we've always said that if a driver has to buy a new phone, which is only available on a let's say Flipkart for a particular day, for a particular time, hell, there's no way he can buy it unless his owner or where he's employed, they support him, like we do for our maids, right? And that everyone's not that as that lucky. So there's definitely a need, because that guy, one, he doesn't know how to order in that time frame. Even if he orders, how to pay. Even if he pays, let's say, then where to take delivery, because he may not be even at home. He's living in a shared kind of a model. And probably there are some other challenges in rural where you don't have enough choices, but they have access, they have money. Can they actually, but they need some understanding, somebody to guide them, somebody to educate them, somebody to do that market making for them. If there is a new brand, that can they take it, not take it, that trust role or trust agent. So it's an area which has always been very attractive. I personally believe it remains very attractive. Has anybody cracked it? I keep hearing different names from between all our organization. Probably the scale yet to happen, because there is still some specific challenges. Part of the reason I see some of these things not working, because when you work with larger companies, larger e-com companies, they always say that we are interested, but their focus is always on their day-to-day top 10, 20% segment.
Absolutely.
I'm sure as an entrepreneur, we all know that when we're building new, we actually need to put 80% of our attention to the new things, even if that is actually delivering you 10% result. If you don't do it, you can't take it to 80% result. Yeah. That's probably where the challenge happens. Some priority change, the person there shifted, you had probably 30-day good attention, you did certain things right, you moved on, then suddenly some new challenges came, you see the focus shifted. Probably that's the challenge, probably both sides and probably within the network. I see no reason that why can't it evolve as it is growing. And again, COVID gives a huge opportunity in that sense for actually entities to work together, those who have channel. I again said that there are three opportunities, right? There is a delivery model, there is a customer acquiring model, and then compliance anyway is not a opportunity for businesses, but maybe other kind of fintech. So if you have a delivery platform, if you have whether it's a layered with technology or not, there is always an opportunity. And if there's a customer model which is already available, you could leverage it. But I would say that I don't have a ready answer. I just told you my experience and some of the learnings I had. I would continue to say that if somebody continues to work on it with right partners, this could be very, very big.
Okay, thanks a lot. I think
Thanks. I think Rahul is sort of in that journey, and we wish him the best. We have one more important, interesting question from Usha. Usha also is the board of Sabke, and she's an independent board member for Sabke, but she has a larger ecosystem understanding. So, Usha, I'm unmuting you. You may please go ahead and ask the question.
Hi, Shashi. Hi, Naveen. Interesting session. It's very inspiring to hear all of the changes which are happening. I had actually two-part questions. One is we hear about this account aggregators coming in. How do you think they will change the landscape? And second is, all the fintechs and even banks, everybody takes consent from all the customers. How much of understanding do you think a common person is having about the consent which he's giving? And are there any, watch out kind of rules there?
Very good question. I think it's partly account aggregator and partly privacy law. And one has to think of a balance. But to be honest, on an account aggregator model, Usha, I think most of the things are fairly okay, because even if you give a consent, the data is only going to travel between bank A to bank B. The aggregators in between are not allowed to hold the data. So to that extent, for this model, it is resolved. I think from a larger impact economic perspective, you still need to see that the kind of data that is available, will it help you get your demography in that system and provide you that convenience? So for an example, when they want a loan, whether their data with the banks that they are working with, is it also available in digital format, or are they connected to AA framework? The challenge is that, like most of the fintech model, we will see that first top 5, 6, 7, 8, or maybe top 10 partners who are going to join will be all of the top at the stake, which means they will continue to service the top 10% of the audience. So how do you make sure that the larger tail, which is actually going deeper across the underserved market or impact segment, how can they also participate? Can maybe probably BCFI can try and talk to them and say, hey, these kind of organizations should also be part of it, should help their partners to digitize their data and make it available digital through your platform, so that again your cost of acquiring those customers also goes down. So I would say on a privacy side, you don't need to worry, at least in this framework. Now, what consent on an AA framework will be given will be largely about the specific information. So there again, it is a lot clearer. But what happens otherwise generally in a digital ecosystem, your question remains open. That ultimately, will my messages get read? Will my emails get read? All those issues remains on a rest of the fintech model. That gets solved and resolved only when the privacy bill comes into the play. There again, there is a debate, because this whole privacy thing is also a private subject matter. I may be okay giving access to my photo, my certain messages. Somebody is extremely wary, says, okay, I don't want to give access to anything. So do they really have that transparent choice? There I'm with you. Probably today customer doesn't understand that. They have to just tick box something which is uniform standard. So either you're in or you're out. When you're in, then you know that, okay, you're stripped naked. Everything is out there now suddenly. So that choices are not there. Hopefully, privacy bill will have flexibility to give the choice in hand of customers to decide what can be revealed, what can be given, what cannot be given. But currently, there are no clear answer to that.
Yeah, and you're right. So it is, I think, beginning of the story. And there is also talk about account aggregators possibly being allowed to also not access not just the banking data, but we're talking about telcos and beyond.
GST is what they are going with. Telco is unclear, but we hope that is allowed faster, because that would add a lot of value for the segment that.
Like you said, unless the last mile players, for example, MFIs, RRBs, cooperative banks, a lot of them who actually service small ticket are still not much in that broad ecosystem, but maybe it's just the beginning, so we may see.
but you could actually drive them to bring them equal priority, because
Yeah.
again, if they are the genuine impact model, then they should actually give those guys the priority.
Right. So very quickly, I want to touch one thing. A lot of sort of transformation happening. Every company now have to build their own digital rails, right, and plug it into the larger ecosystem. While we do that, there is this whole dilemma that incumbent organizations, you have built your own fintech, and proven the model. What do you advise these organizations? Should they invest a lot in technology in house and build fintech for themselves, or is there a merit in partnering fintechs? Sometimes you see fintech as a competitor, but is there a synergy? We know banks try and do that, but still very early stage. What is the advice to incumbent financial organizations who have so much reach, and they are the ones who can actually make the impact? You don't really need a startup to make the big change. So what is the advice? How do they build their own fintech capabilities?
So I think this is, even in one of my comments said that there are two kind of organizations who are fully digital or who are a little bit hybrid, but not. So it's like a partly acquisition of customers through physical and the back end is digital. So you have two, and then one, these are fully digital. I haven't seen yet a successful example of people being able to make a complete convergence and a seamless transition. And this goes even true right up to Walmart. They were quite Flipkart, but has that transition integration happened? Only time will tell, right? Same way, I think a lot of other entities are doing it. Now, I think increasingly, even in our journey, even in your journey, all of us would have tried to do our own digital in a way. But what we've realized is that it doesn't work this way. It's a culture, it's a mindset. And even banks have tried it. And by the way, either of these channels are not very, let's say, I would say they are not easy to build. It's not a small investment to build either of those. One would think that, okay, intuitively making an app is what a big deal. Reality is when you actually go out and if you really want to do an impactful job, it's not just about that, but so many things that goes behind it, especially the digital advertisement around the acquiring, around the matrices that you build. So actually either of these things you do, you need equal serious attention, and rarely you could do it. So I think the good part is that everybody is realizing, big or small, that it's actually a collaboration model. Unless you are ABC type of organization or a tech fin where you already have a large number of customer and capital, you could build it in-house. But in most cases, I think it's a collaboration. If you are a hybrid model where you're acquiring customer physically, you're better off finding right partners who can help you acquire customers digitally as your customer gets digitized. Those who are on full digital, if they need expansion and scale, no way they're going to get at least the next decade only with being digital. They will necessarily need those physical access channel. So best is to have a partnership opportunity. I think that's what banks and fintechs have realized. That's why you see today a lot more partnerships happening. The challenge remains, of course, of the partnership. Sometimes you get a great partnership going, a lot of good results. Sometimes they struggle, sometimes it doesn't work. So those challenges are what we need to work through. But I think the best model is collaborative. Most people are realizing now, of all types.
Yeah, the new word emerging is co-opetition.
Yeah, now that's becoming true. We always heard this word, but we have that typical Indian psychic in entrepreneurs that, boss, what's a big deal? I can always do it.
Correct.
And that probably included me in my past avatar. But increasingly, I think that's not going to be true. It's expensive. It's going to be more failure than success.
So before we close, I think we have a couple of minutes. I was just going to ask my colleagues if there are any questions coming in the Facebook channel that are interesting to ask, maybe one or two last questions. Anish, you have any questions from the Facebook?
We've almost covered all the questions, sir.
Okay, great. So I think we have covered quite a lot of ground, Naveen. I think this is amazing, fascinating discussion. We've started all the way from the very big picture to more or less rails and nuts and bolts as well to some extent. Really appreciate you bringing in the perspective from both practitioner and also on the integrator side of it. On a Friday evening, took time out, and also thank you so much for the audience who have patiently been around at this time of the hour. And we have people joining from various parts of the world, so appreciate everyone who has joined in. And stay tuned for more to come on this channel. Thank you, Naveen.
Thank you, Sasi. Thank you, everyone. Bye.
Thanks, everyone. Have a good night and good day.
Good day.